Selling weekly options for the wheel strategy isn't passive income. It's a mathematical trap that increases your assignment risk by 400% compared to this specific time frame. Beginners chase weekly premiums because the annualized return looks higher. But look at the gamma risk in this chart. In the final 7 days, price sensitivity explodes, forcing you into bad assignments. So you switch to 45 days, but here is where 90% of traders fail. They pick the safe 0.10 delta strike to avoid assignment entirely. This is the probability paradox. At 0.10 delta, your premium is so low that a single market correction wipes out 6 months of gains. The math requires more aggression. To actually profit, we need to target the golden zone. This is the exact intersection where theta decay accelerates, but before gamma risk becomes unmanageable. Here is the optimized setup used by professionals. We sell 45 days out to capture premium, but we close early to avoid the endgame volatility. Master the 45-day cycle and stop gambling.